Well, actually, here we go again, mate. These come around quick. Today, we're going to be talking about an old favourite of ours, directors' penalty notices, or DPN. Now, we've spoken about this before many times, but we still get asked lots of questions about DPNs and how it all works. And given all the warning letters that went out fairly recently, we thought it was a good time to have a deeper dive into DPNs and just have a chat about how it works.
Yep.
Now, before we get into that, though, Ashley, what's the news updates for this month? What do you got for us?
Yeah, look, well, it's the beauty of insolvency is it doesn't change as quickly as monthly, but certainly there's lots of bits and pieces going on. I think everyone would be fully aware of now the interest rates started going up this week. So that's we think that will start having some impact in a number of different areas, particularly with the ability for people to borrow money to deal with some of the problems that may exist. I think with the elections around the corner, I think it's quite clear that we believe, well, I shouldn't say it's quite clear. My belief is that the ATO are sitting a little bit patiently waiting for the election to be over before they hit the button. So we would anticipate possibly as early as our next webinar, or if not one after, we're going to be talking about the change in aggressiveness of the ATO. So they're the main things I think that this month we're seeing will have an impact on what we're doing. Interest rates probably still a little bit early at this stage to see how that plays out. I think even though everyone said they're increasing them, they're not increasing them for another 2 or 3 weeks. So, the impacts of that will take a couple of months to flow through.
And I think you're right about the ATO, Ashley, and sending out somewhere all those warning letters. It's clear that they're going to start acting at some point, whether it's in the near future or a couple of months down the track.
Yeah, we'll talk about that timing as we go through. And for everyone, as always, we try to be as flexible and involved as we can through these. So it's interesting, we found no matter how much we talk about DPNs, Phil, we still find people ask us a lot of questions. So if things aren't making sense or you'd like to ask a question on something that we're talking through at the time, you can use the chat box to put your question in. We'll try and deal with it as we go along. If not, we'll get to them at the end if we need to as well.
All right, Ash, thanks for that, mate.
I better put the chat box up so I can see the questions.
Yeah, good idea. I might have to do the same. So let's have a talk about directors' penalty notices.
Yep.
And I think there's been a number of changes in DPNs over the years, which has sort of confused a lot of people. So let's just start with, what does a DPN cover? And can you give us a bit of a history lesson about how that's evolved over time?
Yeah, so I think where some of the confusion came from is in the early days, DPNs were only for superannuation and PAYG. They started off being only those two, and the rules around them were very much, were that you had 3 months to lodge your BASs before they became what they call lockdown. And even the lockdown rules came in a little bit later as well.
So you had 3 months from the due date to lodge everything for PAYG and super.
That's correct, yes. So it started with PAYG and super. Then they changed the rules around the director penalty notices for superannuation and reduced the time frame that you had to make your lodgements for it not to be this lockdown DPN. And that originally came down to 1 month, and it's now the day that it's due to be paid. So rather than talk about the history and getting confused again, superannuation, if you can't pay on a day, on the day that it's due to be paid, you must lodge the superannuation guarantee charge forms. Yeah. 2 years ago now, so in March of April 1st, all the changes for DPN seem to happen on April 1st, which I find really interesting. But on April 1st, 2020, the DPN regime got extended to include GST, wine equalisation tax and luxury car tax. So everything on the BAS is now effectively DPNable, as well as superannuation, which, as we know from the people listening, would know that super is not on there. So for everything related to the business activity statement, that if it's not lodged within 3 months of its due date, it will form a lockdown director penalty notice, and the director will not be able to get out of the debt personally.
Right.
Superannuation, I can't be clearer. If you can't pay it on the day, you must lodge your superannuation guarantee charge forms that day, otherwise the director is caught.
Now, I know that these changes came in quite some time ago, Ashley, but would it be fair to say that there are still a lot of directors out there that are unaware of this or may have overlooked some of these steps?
I think most of them, and it's like a lot of things. If you don't think it applies to you, then you don't have a knowledge of it. And directors need to know a lot of things. So, particularly around super, there's no doubt that there's a complete lack of understanding of the risk of not doing the forms on the day. Mm-hmm. And I guess part of that is directors always believe they're going to do the right thing and they're going to pay it. Mm. So they don't think that they need to protect themselves. So we see a lot of that. And in regard to the GST, I think because that happened in the middle of the pandemic and the ATO went soft basically from that point, there's been certainly not a lot of talk about it because no one really cared.
Yeah. So, as you mentioned earlier, whether the debt was reported within the prescribed timeframes or not is really important. And we're going to talk about that a bit later.
Yeah.
And you mentioned there that the regime changed during COVID. What other observations, or can you expand on that a little bit for our audience?
Well, I guess the through the pandemic, basically, there's been no issuing of director penalty notices that we're aware of. They certainly, the ATO, as we know, has been very soft and very supportive to businesses through the last 2 years. So there has been no real issuing of it. And with the GST changing in April of 2020, it got lost in everything else that we were worried about. Yeah. So that's sort of why things have been lost. And I think the ATO, we talked about these warning letters, and we'll go into a fair bit of detail around those. On the 28th of March, they issued somewhere between 30 and 50,000 warning letters. And, you know, in my career as a tax agent and now in the insolvency space here, I haven't ever seen them do a warning letter for possible DPNs. There has been some media that has said that they issued 30 to 50,000 DPNs. Yes. That's not true. They are warning letters only. And I'm actually going to bring one up on the screen to show a bit later so that people understand the difference. But I think that's a clear sign that they wanted to go down that path, and they're going to use those powers in the future.
Well, that's a massive change, really, actually, if you think about it. If they've issued no DPNs during the pandemic, when they do start issuing DPNs again, and they will, it's going to include a GST component. Yeah, I know wine equalisation tax and luxury car tax, but obviously the big one's the GST.
Yes.
So let's talk about a director's liability under a DPN. How does that all work?
All right, so I'm going to confuse everyone here, and hopefully I can unconfuse at the same time. So under the tax legislation, the minute that you lodge the minute that a tax, the GST, PAYG, and everything on the BAS is due, a director is actually liable for it straight away.
Straight away.
So they're automatically liable for it personally. However, the ATO cannot enforce against that liability until they issue a director penalty notice. Mm-hmm. So they need to enliven something that technically already exists. So they are already liable for it, but they don't have an ability to chase it until they enliven it with a director penalty notice. There's one of the ATO office used to call it the DPN ferry has given them a visit. So until they sprinkle the DPN ferry on it, they can't actually chase it.
Yeah, right.
Yeah. A very strange tax officer who calls a DPN related to a ferry, but anyway.
Yeah, so they're automatically liable.
Yep.
And so it already exists, but the DPN brings that liability to life. and
That's
lets the ATO chase it. And a little fairy comes and pays me a visit, according to
There's a little sprinkle.
a senior officer at the Australian Taxation. So are all directors liable under a DPN, Ashley?
Yeah. So all are liable. It doesn't matter, if there's 5 directors or 2 directors. Everyone, it's a joint and several debt under the taxation laws. So they're all liable for the full debt. And if one director ends up paying the DPN, that director does have a personal ability to chase the other directors for their share.
Okay.
But the ATO doesn't give 2 hoots about that. They just want to get paid. They don't care who pays them.
So if you and I were both directors and we both got a DPN for $100,000, of course, I'm not going to pay it. So you're going to pay it.
I'd be relying on you, mate.
Okay, you pay the 100 grand and then you can ask me for my $50,000 share.
That's correct.
Okay.
Yeah.
All right. Anything else to consider when I look at directorships and DPNs, Ashley? What else should people be aware of?
One of the big ones that we're seeing, which is a bit concerning at the moment, is that if you resign as a director, that doesn't absolve you of the risk of a DPN if there is still outstanding tax debt.
Right.
So if you resign as a director, you're still responsible for any of the GST or any of the DPNable debt up until the point of your resignation.
Right.
So if you resign in December and there's still an outstanding debt, then they can still issue you with a director penalty notice in June. It may be different to the other directors that are still there because there might be March and other debts there, but certainly up until that point. So resigning as a director when there is outstanding tax debt, it can be a very dangerous thing to do.
Well, really, I was going to say, Ash, when you think about it, 2 years of the pandemic, the ATO haven't been sending out DPNs and haven't been liquidating companies. So there could be directors out there that resigned 18 months ago, 2 years ago, and that debt's never been paid. The debt that they incurred during the time they direct is still sitting there.
Yeah, and once they've resigned, they've got no power to go and actually have a look and see what's going on.
Yeah, right. Well, I think that's a great message there for anyone that's got a client that has resigned or is intending to resign as a director around where they sit with their personal liability.
Yeah.
All right, so let's talk about the ATO and their little DPN fairy. If I was a director, where would the DPN fairy come to pay me a visit?
Yeah, so this is another thing that people need to be really careful of, particularly if you're running the registered office of the business and directors believe that it's the accountant's responsibility. The director penalty notice will be issued on the personal address of the director as per the ASIC register.
Right.
So as most people would know, there's a registered office on the ASIC list, but then there's also each director has a personal address to attach to it. So regardless of whether they're lodging their tax returns at the new home address or anything like that, the address that is on the ASIC register is where the director penalty notice is allowed to be issued.
Right.
And through hundreds of court cases where people have tried to say they've never received the DPN, it's quite clear under the courts that they don't have to issue, they only have to issue to the registered address as per ASIC. So if a director's moved, or one of the big things we've seen is where people have been got separated or divorced.
Yeah, right.
And one person's moved out. Then the issue, if it's not a very friendly separation, some of that mail may not get passed on, and that's still, from the ATO's point of view, it's completely legal and it doesn't matter.
Geez, I bet a lot of company directors don't realise that, Ashley. Like,
I don't think there's anyone that does, really. Yeah,
as you say, registered business officers get updated all the time because the accountant does that, and they know they got to do it, and they're very good at it.
Yep.
But there must be lots of directors out there that have changed houses 3 or 4 times since they lived it where it says they lived according to the ASIC records.
Yep.
So good idea, maybe if for those end of year discussions that might be coming up with clients towards the end of the tax year.
To have a look at it and confirm it. Yeah, when the annual reviews come out, so that some of those details are on there, so they should be ticked off and checked then. But certainly when we when we see a new client, it's one of the first things that we check.
Yeah.
And I would say probably 30 to 40% of the time they're not correct.
I think you're being generous.
Mm.
I think it's maybe more than that. So the DPN fairy pays me a visit, right? And they send it to, let's say they pay me a visit personally.
Why not?
I actually live at that residential address on ASIC, right? So I actually see the notice.
Yep.
So what does that mean for me now?
So it depends on how you've been reporting. So whether you've been a good boy or a bad boy in terms of how you've kept your records up to date. But what it does, if we put aside the timing issue for a minute, what it means is that when you receive your director penalty notice, you'll have 21 days from the date on the letter.
Thank you.
I need to be clear on that. It's not the date that you receive it. And we all know how effective the Australian postal system is now. So you can actually lose quite a lot of time in that. But if you've lodged on time if you have lodged on time, then you'll have 14 days to address and remit the debt. Yep. Otherwise, you'll become personally liable for it.
All right, Ashley, now we're going to stretch credibility here a little bit. But let's just say that I've been a good boy and I've reported everything on time. What does that mean?
I think we need to reverse it, mate. No, I'm the good boy. There's no chance you are.
All right. Now you're the good boy and the DPN fairy visited you then.
We'll pretend for a day that you're good.
Okay.
Okay. All right.
I'm a good boy and the DPN's visited me. I've reported everything. What's that mean?
Right. So as I said, you will have 21 days from the date of the letter to address it. If it lapses after that 21 days and you haven't done anything to cause the remission of it, then it will become a personal liability of you personally. Now, as I said, the Australian postal system is awesome. You quite often directors are only getting that within 14, 15 days. So it's the day of the letter, you'll lose potentially 5 to 7 days for the Australian Tax Office to issue it.
Right.
And then you've got 14 days left to deal with that debt and remit it.
So even if I've been a good boy and reported everything on time, I still don't get a lot of time to try to deal with it.
No.
In whatever time I've got, what can I do or how can I get out of my personal liability for that DPN?
So there's only 3 ways that you can, there's 4 ways. First one is go and pay it. Pay it in full, completely remit the debt.
Yep.
And I'll talk about payment plans in a second because that's a different issue. If you pay it in full, then it's deemed remitted and obviously you have no personal liability.
Yep.
If you don't have the ability to pay it, you've only got the options of putting it into liquidation, putting the company into administration, or the new small business restructure process, which came out in January last year. Right. They're the only 3 options you've got to stop it becoming a personal liability of you. They all must be done before the 21 days are up.
Ooh. They're all major steps. We're not talking about something you can do in a few hours. Right?
No. Now,
you mentioned payment plans, and I heard some talk, or I saw some talk on social media about payment plans recently. What's going on there?
Yeah, so someone came out saying that there was some new legislation saying that now you couldn't, if you remit a payment, if you put in a payment plan, it doesn't remit a director penalty notice. That actually hasn't been in place since about 2016.
Yeah, right.
So very clearly, if you enter into a payment plan, so in the early days of DPNs, if we go back into the history, it was an option to enter into a payment plan to remit the debt. That's gone. You cannot do that. You can enter into a payment plan, and you can make the payments on the payment plan, but the debt is still a personal liability. Now, obviously, if you complete the payment plan and pay everything out, there's no issue because once it's paid, it's paid. But if you default on that payment plan in 3 or 4 or 5 months' time, then whatever's not paid on the director penalty notice at the time is a personal liability of the director.
And it would have locked down because my days would be up on my notice.
That's correct.
On skis. All right. So it doesn't sound like waiting for a DPN to arrive is a very good idea. I wouldn't have a lot of time to make all of those arrangements, not unless I already had some sort of plan in place on what I would do if I got one. If only the ATO sent me a warning letter or something like that, I might be able to make a plan. What observations do you have there, mate?
Look, I've got to say this warning letter or the possibility of a direct penalty notice, it should be considered one of the biggest lotto wins for directors with debt, because as you say, 14. Let's assume 14 days. We lose 7 days with the Australia Post. 14 days. If you've got a business that's relatively strong or is worth saving or worth restructuring, 14 days is not a lot of time to do that. So knowing that you've got a risk and knowing that you can actually put a plan B in place to protect against it before it becomes a real timeline issue, it really is should be considered lotto for business owners, because it now gives you, here's my problem, here's a way that we can actually work our way through it.
Yeah, right.
Leaving it sit and just going, oh, yeah, Ashley, I got one of those DPN things, or my client got one of those DPN things. Can you fix it in 14 days? We can do some stuff.
Maybe.
We can do some stuff, but it's not going to be as good as if we had a couple of months to deal with it, which is what we're sitting on now.
Well, that all sounds pretty tough to me, Ash. Probably less than 3 weeks to take one of those actions, like appointing a liquidator.
Yep.
If I don't like the sound of that, I can't imagine I'm going to like a lockdown DPN. Tell me about a lockdown. Okay,
so the difference in the lockdown and the normal DPN is that if you haven't lodged within the 3 months for GST, PAYG, wet tax and luxury car tax, if you haven't lodged within the 3 months, the ATO deems it to be already locked down, which means that you cannot remit the debt. You can't appoint a liquidator, you can't appoint an administrator or a small business restructurer to get out of the debt. You as a director are automatically liable for the debt.
Right.
And it's already on your personal thing.
Now we've got a question from Disha. I hope I'm pronouncing that correctly. And it says, hi guys. So if payment plan says pay on 5th of May and I pay the 5th of May, the ATO takes several days to credit the account. Are we in default? No, it's not the date that the ATO processes it. It's the date that you remit it. It's the date that they get it. So they should be okay with that.
I just, there's probably a little bit of ambiguity in that. If you're talking about paying the debt in a normal payment plan, I'm going to be a little play both sides of the fence there, Desha, and say that I'm not absolutely certain. It needs to be accredited to their account to not be in default under a payment plan. Now, if you pay it 2 days later, they get the money, but it could still be in default if they don't deem it to have been received. If we're talking specifically about DPNs, leaving it to the last minute is a very dangerous thing in my mind.
Just while we're on that about DPNs, I might just share a story with one of my clients. They engaged with us and we warned them of the importance of lodging within the prescribed timeframes. There was some debt that was unreported. It was within 3 months of the due date. They lodged it the day before it was due. The ATO did not process that lodgement for 3 days. And when they sent a DPN, it had that quarter included in it. And the ATO, when shown that it had been, the obligation had been reported before the expiry of the 3 months, they amended the DPN to take that out. So when you look at those reporting times, it's not necessarily when they update the ICA, it's when they get the money or it's when they get the lodgement.
Yeah, and as most of the people listening would know, there is a process date and an effective date on the integrated client account.
All right. So it would be pretty common for penalties to have a mix of the two, wouldn't it, Ash? That some's been reported on time and some hasn't. And it's not uncommon that the PAYG and the GST, for example, has been reported and the super hasn't. Do you see that often?
Yeah, you do. I mean, super, doing it on the day is obviously, having to report it on the day leaves you very little time to A lot of directors think that they're going to be able to pay their super on time. Something happens, a debtor doesn't pay, and then they get caught out. So you don't think about lodging your superannuation guarantee charge forms and doing all the work to do that when you've realised at 9 o'clock in the morning that you're not going to have the money that afternoon. And I know there's a lot of businesses with more cash than that, they're not waiting on debtors, but there are a lot that aren't as well. So super we see a lot of. And then when the ATO issues a formal director penalty notice, they do actually show you the difference in the reports now. So they've got a new letter that actually shows your lockdown component and the non-lockdown components.
Okay, so the big message for everyone is, and we say this a lot, so please don't roll your eyes at me, but if you report your obligations on time, even if you can't pay, please get them reported so that they've got the opportunity to get out of them. And Ashley's just explained why that's so important.
Yeah.
So Ash, I want to move on now and talk about how the amount shown on a DPN may differ from details on the company's integrated client account. Could you run us through that?
Yeah, I'm actually going to use a real example of one here, Phil. So I'm actually going to try and be Mr. Technological.
Oh, this will be good.
Actually share my screen or share a screen. And let's do that there. So, Phil, can you see?
Well done.
Hey, look at me.
Well done. How good are you?
I might have a lot of grey hair, but I can still use a computer.
There you go.
Okay, so these are the letters that we're talking about for those who may not have seen it and have no clients that are in this situation. So there are two letters that they've got. One is the warning of the possible DPN. And then the other I'll flick down to is the Credit Reporting Bureau letter. Now we'll talk about those in a minute. But what you'll see here is that under the Credit Reporting Bureau letter, which is effectively this client's total integrated client account and his super. So his activity statement shows 378,000 is owed, and he's got a superannuation guarantee charge of $506,000. So he's got a bit of a big problem. But he received these on the Credit Bureau only got a couple of days before he got the DPN letter. But if you look at the breakdown under the DPN, if you look at super first, you'll see that that's only 240,000, not the 506 that's on his statement.
Right.
Now, DPNs can only be issued for the core debts.
Okay.
So not the interest, not the penalties, not all that sort of stuff. So, and with a whole lot of accountants in the room, they could do the maths here that this here comes to about 310,000, and the integrated client account was sitting at 378,000. So there's about a $60,000 difference there, which is related to interest and charges for late fees and all the rest of it. So there can be two very different numbers, which potentially is a good thing for directors. And just very quickly in this particular case, we've got the director wanted to do the right thing and wants to do the right thing, and we're talking to him now about a strategy. But paying 500,000 for the super compared to 250, it's actually in our interest in this particular case, and I'll stop sharing now. It's actually in our interest, in the director's interest now, to actually put the company into liquidation and almost force the director penalty notice to come into play, because then he only has to pay 250,000, rough numbers, to meet the obligation and to get the money through to the staff that have got some outstanding super. If he tries to keep the current company alive, he has to pay 500 to do the same thing. Now, in this particular case, we also know that he has been a good boy, and he has been lodging his business activity statements on time, and we've done a review of the integrated client account to know that. So if in the strategy that we're putting together for this client, we'll actually put the company into liquidation shortly after doing a restructure, which will take care of the PAYG, the GST, and half of the superannuation, so that we know that, and we've got a strategy in place for him to pay the 250 that we know is going to come under the DPN.
Okay.
Now, superannuation, that was done because of an audit, so we know it's already it's a lockdown DPN, although it hasn't been issued yet.
They've got to pay it anyway.
But we need it to be issued so that he can then pay the 250 rather than the 500. Right. So there are having this information. As I was saying before, it is really like winning the lotto for a business who's in trouble, because it actually gives us some more strategic advantage to come up with a plan to allow businesses to move forward.
Okay. Now, I know we talk about this a lot, Ashley, but sometimes it doesn't really make a lot of sense until you see warning letters like that and you see the reality of how it breaks down and what it means. Now, as you showed us on the screen, the other warning that the ATO sent was about their ability to report overdue tax debt to credit reporting agencies.
Yep.
What can you tell me about that?
Yeah, so again, this is another one of these legislations that came into play in the middle of the pandemic. So it actually got introduced into legislation in February 2020. And what it does is it allows the ATO to put a default on a taxpayer's credit file for non-payment of their tax debt.
Right.
So I knew it was spruiked a lot before the pandemic, but of course got lost in the pandemic.
Yeah.
And now, obviously, by these letters, they're deciding that that's a pretty exciting way to go.
Pretty exciting way.
Well, and look, I'll explain what I mean by that. It's that, so one of my big things that I believe is going to happen is that the ATO doesn't want, and the government doesn't want to be on the front page of the news for shutting down small businesses. Both of these things, and it's interesting that they've used these letters, is that both of these things are not court actions to put a company into liquidation, but both of these actions will force a director to potentially do it themselves.
Yeah.
So if they liquidate the company, it's the director who's liquidated it, not the ATO.
Not the ATO.
So these are two, for me, if I'm sitting there going, I don't want to look like the bully, these are the two tools that I'm going to use to not look like a bully, and make the directors make decisions that they're otherwise trying not to make.
But at the end of the day, you jump rather than they pushed you. That's the way it looks. All right.
Yeah.
So can they report just anybody, any company at all, to credit reporting agencies, or are there some sort of criteria?
Yeah, no, there is a criteria, so that you must be, the entity must be registered in the Australian Business Register, so have an ABN. The tax debt must be over $100,000 and more than 90 days late.
Right.
The debt can't be subject to current investigations or complaints. So if there is a fight going on, then they can't report it. And effectively, it says that they're only going to report it to people who aren't engaging with the ATO.
So you better engage, eh?
Or talk to them somehow. Yeah.
So not just any company, but when you look at the criteria, that would apply to a lot of companies that are out there. Now,
I believe so. Yeah.
Part of that may encourage the director to seek the appointment of a liquidator. What else might happen if they didn't want to do that and they got reported to the credit agency? What's going to happen?
Yeah, so this one's probably a little bit scarier than some people really give it credit for. So the obvious one is that if you've got a default on your credit file, particularly from the ATO, you're going to struggle to get new loans or to borrow money to pay the tax debt back and all that type of stuff. So that's the obvious one that everyone thinks. But where I'm more concerned about this reporting under the credit reporting agency is that a lot of creditors now have credit watch on their suppliers and on their customers.
Yeah.
There's a real, particularly if you look at the building industry, there's a real fear that we're going to see a lot of builders go down. The minute someone defaults, that mark goes on the file.
Yep.
Now, if you do that, if you get a default on your file and someone's got you on credit watch, they're going to stop your account. So if you've got a supply account with someone and you get an ATO default, they're going to stop supply. You might have to go to COD to deal with them.
Yep.
So that's going to put your business at risk very, very quickly, almost quicker than anything else the ATO could do.
Quicker than the director's penalty notice.
And again, it's not the ATO doing it per se. They're creating issues that then force you to do things.
Yeah, with the banks, you got to, if you're a borrow money from a bank, they do their annual review. They're going to want to see your integrated client account. If there's a tax that they're not going to like it. If there's a credit default, they're going to like it a whole lot less as well.
Yeah.
So, and just imagine for those businesses out there, if they did get a credit report and everybody put them on COD, that's going to be almost impossible to manage.
It will kill a business. Yeah, absolutely. Now, Ryan's got a question about what engaging with the ATO is.
Yes, good question. Thanks, Ryan.
It is, and look, I don't even know that the ATO can actually define it, but what I do know is that it's more than just showing a payment here and there. There needs to be communication about a way of getting the payment made. It's quite interesting. They often don't recognise intermittent payments. You know, like if you put a payment plan in place and you miss it by 1 day, under the system, it's deemed defaulted. So therefore, for the ATO's point of view, you're not in the system. Even if you make the payments a day later, every day after that, on time, it will still deem to be not in. So there needs to be communication on record that you're actually talking to them, whether it be the accountant or the client itself.
And with those payments plans, as everybody would know, you must keep your current lodgements up to date and pay them when they fall due, as well as meeting the payment plan on the rest of it.
And if you lodge that a day late, then it's a default as well.
Now, I think what the ATO are really driving at, while they may not come out and specify the words, if they said, we want you to enter into a payment plan to pay this debt back, and you said, I can't do that, I reckon they're going to say you're not engaging with the ATO. So a lot of that is driven around payment plans and established arrangements to clear that debt over time.
Yep.
So the ability to report taxpayers to the credit reporting agency is a very powerful tool, but the ATO have not really used it, probably because of the pandemic.
Yep.
Time for you to be a prognosticator, Mr. Shield, and get your crystal ball out and tell us what you think the future of that looks like.
Well, they've actually become out pretty clear just by these letters saying that they are going to use it. So I was speaking to one of the credit reporting agencies, one of the senior people in there. They've had communication that they will start sending them through.
Right.
So I think by the fact that they've sent out these warning letters and the communications that we have heard about, they intend to use this tool. Again, my belief is after the election.
Look, my personal belief is I think they're going to target naughty boys and girls, right? Like repeat offenders, or if they've got a warning letter, and as Ryan's question was, they haven't engaged with the ATO, they haven't spoken to them about it. You know, I think it becomes a lot more likely. Wouldn't you? Would you agree?
I would agree, absolutely.
Okay. All right, Ash. Now, thanks for that, mate. But at some point, unless things are worked out, the ATO are going to take recovery action. Right, they're not going to sit on their hands forever, and we've spoken about the potential timing of that. What does that look like for the ATO, and how might that be a little bit different to a normal trade creditor, for example?
Yeah, so so just so we're clear, this isn't well for a company, in a company scenario, it's not only just the DPN stuff; it's the whole debt. Yep. They can issue what they call a creditor stat demand. Right. Now, that's actually jumping a step ahead of the normal court process. So if you're an unsecured creditor and you want to take someone to court, you go through a statement of claim, which then gives the person you issue it to 28 days to respond and say, no, that's not a right amount, or there's something wrong with that.
Yep.
You then go and get a default. The ATO, because there's no dispute about the debt, because you've reported it, or they've deemed it under their rules and then they've actually just told you what your debt is, they don't need to go through the statement of claim process. They can go straight to a creditor stat demand. Creditor stat demand gives you 21 days.
21 days?
21 days.
From the date of receipt, not the date of the notice, but the date of receipt.
So once the company receives that, which is sent to the registered office of the company, once that's received, and that's a real trick for accountants too. If you're holding the registered office, the day starts once it hits your office. So that can be a real issue.
Yep.
So that then there's 21 days for that. If at the end of that 21 days you haven't done anything about it, you're deemed to be insolvent, and then the creditor can go back to court and get their wind-up notice and take you through the court process.
That's pretty serious, Ash, and that's companies. What about directors and their liability under a DPN?
So if they've got a director penalty notice that's expired and they want to come after them, it's a very similar process personally. There can be a statement of claim process that they need to go to. But again, because it's a deemed debt and a known debt, it's not disputed, they can go straight to a bankruptcy notice. And then you got 21 days from receiving that bankruptcy notice to deal with it. Otherwise, again, you're individually deemed insolvent, and then they can go to court to get the sequestration order to put you into bankruptcy.
So again, Ash, not a lot of time to do things once things start happening.
No.
Now, we've talked about some common sense things that directors can do. Plan B, we refer to as a plan B, and we're running out of time. So I'm going to put you on the hot seat here, and I'm going to absolutely hammer you with rapid fire questions, and you're going to do your best. So our audience, we don't expect you to keep up with this.
We know that my best isn't that good, Phil, but we'll have a bash. All right.
Well, we don't expect our audience to keep up with all of this. If you can, give us a ring, we'll probably give you a job, right? But if you can take one thing out of it, or if it raises questions, feel free to ring us later. So here we go, Ash.
All right.
ATO reporting.
Always report on time. It gives you a sporting chance.
Yep. If you get contacted by the ATO about an outstanding tax debt,
talk to them.
Talk to them.
I don't look. You've got to find a way of talking. Otherwise, they're going to start using all these tools that we're talking about. So, and I know, the problem is that they're calling the accountants, and then the accountants are going to try and find a way of getting back and all the rest of it. But without engagement, we know that the directors are going to get attacked.
And if that debt's insurmountable, get some help. If they can't pay, get some help.
Get some help soon. Yeah.
Company directorships.
Look, big believer, as we've talked about 100 times, only one director.
Yep.
Let one person in a family unit only have one person have the risk. Because there's joint and several debt, let's just keep it with one, not with both.
Awesome. Division 7A loans.
Great for accounting, terrible if you're in an insolvent situation. So if you've got a tax debt, if a client's got a tax debt at the moment and they've got Division 7A loans, then you need to look at doing something about them and getting them cleaned up early.
Okay. Debtor-creditor relationships within a group and monies owed or owed to related parties like mum and dad.
So big thing there, again, nothing new for if people have been listening to us regularly, is having PPSR securities in place for those loans.
Yep. And
making sure that those they're either valid loans or getting them settled out, so that you don't have interconnections between entities, particularly if they're unsecured.
So settle the loans if you can, or secure them if it's appropriate.
Yep.
Ownership of critical business assets.
I'm a big fan of asset holding entities for this one. So have an asset holding entity that owns the trading name, the IP of the business, the customer lists, and the physical critical assets, and enter into a PPS lease with the trading entity to have use of all of those critical assets. So if we need to pull them back from a risk situation, your assets are less at risk. Okay.
Ownership of family assets, like the family home.
Similar to the conversation about one director, in a family home, one person is the risk taker and they're the director, and the other one owns the family and the private assets.
Right.
And if they're not joint, if they're joint at the moment, there are ways to separate them through equity deeds and equity sales. And again, if you've got any risks sitting in your business now's the time to start making things happen to get those resolved.
So some of those things, Ash, are what you talk about when you say have a plan B in case something goes wrong. Any final thoughts on all these issues before we wrap up, mate?
Yeah, look, I'll keep my final thoughts really simple. Is that we've spent the whole time talking about director penalty notices and a little bit on this credit bureau. What I want to be able to say to people is that this is a unique opportunity that in all my years as a tax agent and then in insolvency, I've never seen warning letters for director penalty notices. In my opinion, the ATO is very clearly getting prepared to try and smack a director to make them make decisions so that they don't look like they're on the front page of the news or in the court lists. Yeah. We've talked many times over the years about 350 odd liquidations a month by the ATO. That will start, but they're going to put the pressure on other people first. So I think it's really important that if you have any clients out there, or we know that there are some directors listening in, if you have some of this debt, getting a plan B now and using the time that this unique opportunity that you've been given to come up with a plan is critical now if you want to move forward.
Anyone that gets smacked really can't say they weren't warned, can they?
Absolutely not. No.
Well, that's all I had for today, Ash. Fantastic job as always.